What's happening, guys? And welcome back to another Sunday Scan. We've had a very eventful week. The markets have actually been able to rally a little bit. We've had some trade headlines relax. So we'll talk a little bit about some market commentary. And then later on, Judah is going to join us and he's going to catch us up on what he's been up to in this market, what's been working, and a bunch of different setups and thoughts on charts that he has. So make sure that you stick around for the full main watches section with Judah. Before we get into that, Centerpoint is running a special right now. Fantastic broker, best reputation in the industry, and what they're offering right now is basically 90 days of free commissions for new accounts. And then for people who are, Investors Underground followers, people who watch Sunday Scan, if you join Centerpoint and if you fund an account, if you fund a brokerage account with $50,000 through them, you will get a free IU membership for a year. So not only do you get the 90 days of free commissions, but you also get in Investors Underground free membership for a year if you fund a Centerpoint account for $50,000. So incredible deal. There's never been anything like it. So if you've been looking for a new broker, I definitely recommend Centerpoint, and I think that everyone should check out that deal. So on to some market thoughts. So basically what we've seen in the market is that when we've talked about bear markets in the past, we always talk about, what regime are we in and what are the key driving variables. So I always look for what is moving the market. And if you look at on the way down during this correction, during this bear market, what has been driving that? And that was the trade talks and the tariffs. So basically, Trump put the huge amount of tariffs on, the entire world, basically, and then especially, fighting with China. So what happened is over the last couple of weeks, we saw that Trump obviously did the 90-day pause on the tariffs for the rest of the world with a small baseline of 10%, and then they're negotiating some stuff. And then with China, they basically tried to de-escalate by, having some phone calls, talking about doing some deals, and not escalating further with the tariffs, at least for right now. So if you have the two main variables that were driving the market down are now basically a little bit neutralized, or at least not getting worse. We talked about that right side of the V concept with stocks, and there's also the right side of the V with key driving variables. And so if you have the worst of it is potentially behind us, then the market could kind of just, chop and grind until either something else comes along or until those headlines reverse, which is very possible. Something else that can happen during bearish markets is that if you had those other variables that were driving things down, so say the tariffs, the China stuff, if that were to spill into earnings, and you see a lot of companies missing earnings and they're not able to make money because of that, that could be another reason why markets would be down. But so far, earnings have actually been pretty decent. We saw Google had impressive earnings, and they also affirmed their CapEx spending for NVIDIA. So you kind of have some of the FANG names, or like the big names, starting to get some life back into them. And so you can have some market leaders, you can have some market key driving variables relax, and that can be a market that can start to get some legs again. And maybe we're still range bound, but it's definitely not as bearish as it was before, unless we have new headlines saying that, okay, the China deal didn't work out, the China negotiations are not happening, and then they start to pull back and we fall into a new narrative. But for now, I see the market kind of just basing a little bit, and then within that, a lot of opportunities, both on the long side and on the short side. Judah and I are going to talk about a bunch of different size companies, big companies, small companies, liquidity traps, continuation trades, and a whole bunch of other things. So let's bring on Judah right now, and we'll get into all the market thoughts. All right, we're happy to have Judah back on Sunday Scan. Judah, welcome. It's been a minute.
Yeah, it's been a while. Thanks for having me back on.
Absolutely. So the market's been super volatile, and I feel like we're just entering a phase where you're starting to see some good long setups, some good swing setups. You're having some follow through on names, both small cap and some large cap. So I figured it'd be a great time to have you back on, see what you're watching, and just to also talk about, what's your take on this market? What's been working? What have you been avoiding? Just catch us up on what you've been seeing in the market, really.
Yeah, so there's been, even though throughout this downturn, there's been some good movers. Those were already the strong ones, the ones that were holding up, the ones that were above the moving averages, and mostly, I guess, delayed reactions. But we also did have a few, of the day one gappers, which I'll go over and review. But overall, yeah, it's been difficult. January, February, even a little bit of March, and now starting to put in a higher low. We gapped up a couple of days ago over I believe it was the 20 moving average and the 10. And now we're just hopefully putting in that higher low in continuation. And now we're seeing a lot of names start to break back out and break over all their moving averages or out of their bases. And now this is just the first leg. So I wouldn't be upset, missing this first leg. A lot of names are pushing out of bases, and to chase them all, I mean, you don't know which is going to actually go, which are just relief bouncing. So the best, in my opinion, for those, I'd prefer to wait for delayed reactions and secondary moves. But there is, a few that looked great. And for example, Netflix came out of its base, but that was off of earnings, and it had great follow through that $1,000 mark. And we had Palantir, which was tightening up very well, had inside days and flagged. It had a decent flag as well. So that was actually one that I took and I'm still in. I sold half today from the gap up day a few days ago. I'll go over that one as well. We had Summit, which has been a huge mover. We have like MVST, which is a smaller type of name, which I could go over as well. And I'll just go over like what I've been noticing and seeing over the past, couple weeks. Even a little further back, I put up a little bit of a list to go through, but I just show you, I guess, what I've seen over the past few weeks, couple of weeks, and what I'm looking for the week ahead.
Definitely. And before we pull up some charts, I want to ask you, so as mostly a long bias trader, when the markets are getting choppy or when you have a lot of reversals happening, what's really the most important thing for you to keep yourself safe? I mean, you've been through a lot of these cycles now and everything. Is it just having a defined risk? Is it waiting for those secondary moves so that you have a defined risk? Like how do you stay from, just getting slammed down on some of these names, in such a volatile market?
I think it's just the same, focusing on the stronger names, not the ones that are down, 50, 60, 70%. Those could bounce, those could do well, but those also, get rejected very hard. Pony had a 3-day great move, but I mean, today was extremely heavy, and it depends, what kind of rules you have. If you plan to hold out longer or plan to buy today, then, obviously today wasn't the day to buy. But something like Summit or the, what was it? NUTX. There's names that I'll go over again, but there's names that, are strong and been strong, and they tend to continue because there's not much that resistance there. And it's not just having some sort of bounce. It's showing strength off of either news, upcoming news, and actual trend and actual volume within those. So that's just something that I've been looking for. I've been avoiding, for the most part, random, just like random stocks that have just been moving off PRs and 1-day PRs. Like I want to see, larger priced, like I guess not even larger price, but over, $5, $10. And I've just been avoiding the biotechs that I used to trade day one, and I prefer to wait for the delayed reaction on those.
Yeah, definitely. Okay, so I'll pull up your chart and then we can go over a few names if you want to talk about it, and we'll get going.
Yep. So this is just a SPY briefly. Now we're putting in this higher low here. We're gapping up over that moving average, and it's very likely that we do continue to push just a little further. Today had a decent, we had a decent opportunity to pull back when the Trump headlines came out on the China tariffs, but I mean, quickly reversed and put in that higher low, held that key, and I mean, pretty much closed at the highs. And if you go into the hourly as well, this is what I was noting earlier in the week, but that it was still pretty constructive. We were pulling back, the volume was decreasing, it was still holding relatively well. And then as we, pivoted up through here, we just continued to grind back up towards these prior highs, and now we're above that. So we'll see, if we get a third day follow through on Monday. But at the same time, this is Palantir. Palantir gapped up the same day that the market did. We had very tight days. We had this initial $66 move to 90, pulled back a little bit, tightened up. The volume was a little less. I mean, it's not completely dried out, but it's, this is kind of what you want to see. And then it gaps up, and it just gaps up out of this base, and it just moves with the market. And this is in my opinion, right now, very strong and relatively strong compared to when the market pulls back. This is barely pulling back. So this, is one example of something that was pretty strong in this market. Crowd, another one that, gapped up day one, closed a little bit weak, but then had decent follow through afterward. We had Netflix, another one that was holding up really well with the market. They had earnings. So as it pushed through, 1,000, it just had that steady. And this was, other than 1,000 being a huge key for it, it was clear keys in the past. And as we got through there, we're just hitting all-time highs. There's also Spotify. That's on my watch list, not for Monday, but for next week since they have earnings. They actually had news today that they're raising their subscription outside the US. And this is just in a base as well, showing great relative strength throughout the past couple months, just basing up here at the highs. And, that's just one to keep an eye out for when earnings do come out. If it gaps up, then that's something that'd be keeping an eye out for. We also had, stocks like TTWO, which is a little bit slower, but this was also, in a very nice base. And we broke through that yesterday. There's just so many names that have looked like that, and in this moment, you want to I at least want to see what's going to come back, what's going to hold up, what's going to put in a secondary type of move and continuation setup, whether it's the 2DLV or just a general consolidation pattern. So that's just what I'm keeping an eye out for the next few weeks, and seeing which continue to stay strong. As for recent movers throughout all this downturn, we had NUTX, which pretty much had, I believe it was their earnings back here. And then we just, put in this little bit of a consolidation. Volume was decreasing. We had this little bit of a pullback. And then we broke up through this tight little day of 72. And we just went straight up from there. Another one was the SMMT. There's a lot of a lot of drawings. So let me just remove that. So SMMT pretty much just had this huge move. I went over this with IU, but had a very big move. We have this move from 16, which is just the bottom of this base, from back here when they had the data out back here. Bottom of the base held 16 all the way up to 26, which is about a 60% move. We pulled back on decreasing volume, and then we just get this 2DLV setup and continuation. And that was a nice 5-day blow off. We blew off through the prior top here of 33, and then today it showed some weakness, and it ended up flushing very hard before pending news came out, and news ended up coming out afterwards. But this is an example of what you want to see, the strength and the fact that it's in this base and pushing up through prior highs. It gives you a secondary type of entry. Same with NUTX. This is clearly stronger than what the market has been at that time. The market's just been going down, but NUTX is gapping up and consolidating and then continuing higher. Let me just quickly add back the volume, and then I'm just going to add back the moving average that was taken out. So, we also have a little bit of small caps moving. So we have MBOT, which was making a decent move, 140 to 260, a little bit of a pullback, and then we get that reversal. And this in general has been strong. It's been holding up kind of well. Same with RR. This has been basing since, or when I say basing, this is it's not completely round trip. We're kind of in this midpoint. It's a little bit like of what Sound was doing back here. We get that move, it comes back down kind of to the midpoint, but we're holding up, whether it takes another 4 months to do what Sound ended up doing. This is what I want to keep an eye out for continued bases and continued strength from those movers from December, the robotics and the drone names and the quantum names and things like that. And we had Janover, JNVR, which massive move on the 7th of April, $5 up to almost 50. We get that 2 days lower volume, inside days, and then we get another continuation. Pretty much, I mean, what is that? That's 170% again. So, I mean, there has been kind of activity. It's not as exciting or as obvious, but Groupon had their earnings. It capped up here. It pretty much soaked that 200 MA, and it just continued going from there. QBTS was another one from about a month ago, which had their earnings and just had a 3-day gap type of move. UAMY, another one that's just held up extremely well throughout this entire, I mean, pretty much for, what is this, almost a year, just in this base, and then we get this push through the prior highs, and it goes up, and it goes up 60%, in the past few weeks. Another one was Hertz, pretty much Pershing Square, Ackman 13F, that they're reporting 12.7 million shares. So this was just, I mean, all day it was just sitting 410, 415, right on this consolidation. It was holding up extremely well, and the risk reward here was, I mean, in my opinion, it was worth the risk reward. You had a clear catalyst, Bill Ackman 13F, and it was just hanging around. It was putting in some sort of higher low intraday, and even if that was missed, once it was on CNBC and they were saying that it was actually more than what he owned, it started to swipe, and within 1-2 minutes, it was only 415, 425. It was breaking through this trend line, which still gave a good kind of risk reward. If you get in 415 or 425, I mean, 5% to low of day isn't really that much compared to what you're putting in, but it gave good opportunity, and it pretty much doubled within the day or two. So there has been things out there. If you're focusing on the strength, focusing on, what's trending, MSTR was another one that, perked up. In general, I mean, this thing's been holding up extremely well. Same like with the sound and with what we were talking about with MBOT and RR, but now we're starting to perk out through, and especially with Bitcoin, what we got was this backside move, soaked this 73,800, which is pretty much this prior top and resistance from the March 24 all the way up until inauguration and Trump's and all that. And once November came and Trump was winning, it popped through, and that's exactly where it came down from and bounced. And now we're reclaiming and soaking that next level of 95, which is this prior support. So MSTR is the only, in my opinion, good-looking crypto name at the moment. It is, in my opinion, the leader right now. Coin is coming off not the bottom, but it's coming off a bottom here. Mara, Riot, they're all coming off bottoms. They all don't look great. Another interesting one, though, that I'm keeping an eye out for is this GME. GME had a 1.5 billion raise last month, I believe. They announced that they were going to, start buying Bitcoin. They had a meeting with Saylor, I believe. Ryan Cohen purchased shares. Some insiders were purchasing shares. They had earnings out. It didn't really react much. It came right back. It's tightening up. It's just sitting in this range for, again, we're seeing a lot of these names in ranges. May 24th till, now, we're almost a year now in this base. And I'm expecting soon, GME comes out and they maybe start saying what their transactions were. When did they buy and how much they bought? And when they announced it, I mean, Bitcoin was down here. So let's say they, 77, low 80s average. I mean, this is pretty good right now. If they announce something like that, we could see it pop through. So I'm going into my watch list for this week. Spot we already spoke about. I'm just going to keep an eye out, wait till earnings come out, see how they do, and make a decision.
Judah, before we get going with this main watches, let me just give the disclaimer that none of this is for financial advice. We are not financial advisors. This is all for educational and informational purposes only. All right, now let's get into some main watches.
And even the review, everything that I went over was just what I see, my personal opinions, views. It's not financial advice, and everyone's at their free will. But Spot, so I spoke about this before. I'm waiting for earnings, seeing how it reacts. Similar to Netflix, I want to see positive earnings and reaction, and I think this could be an interesting one if so. DLTR was one that I was watching last week as it popped out of this little bit of a consolidation and pretty much long base here. So we got a little bit of a perk out. We're pulling back a little bit, volumes decreasing. Potentially we get that leg up. The other one, which is a little slower, it didn't really interest me, but it did have a valid daily, was DG, Dollar General, which, as it popped up through this 90 level, gave a little bit of a move, but slow as well, but pulling back, decreasing volume, same idea. And this gap level, pretty big, 94, but Dollar Tree is a little faster for me and more interesting in my opinion. So Dollar Tree potentially reversal there. GME we just discussed. This GME also kind of reminds me a little like DJT when he won Iowa back here, like how we get that, we get that action back here, which is what GME we saw back in May or whatever it was last year, and then we consolidate. We have this little bit of a tightness area, and then a gap or even a push. I'm not saying that this is what it's going to do, but just this daily beforehand, kind of just reminds me a bit of that. So I'm just looking for, even if it's like a little bit of a grind and we start grinding out, that would be nice too. MVST was also one that we actually had on watch for quite some time after this move. We had this, dollar to pretty much this 80% move. We tightened up, and then we had this one on watch as it broke through the 172 level, and this gave a great move right into this prior resistance. Now we're pulling back 2 days, so if we get some reversal and trend, then I'll be interested in that continuation. This is also another one which has held extremely well since that December move. I feel like there's been a lot of names that have been holding up very well from December and November. Like they haven't really broken down too much. I mean, QBTS pretty much just holding up. We got IONQ, which gave back more than most would expect since this was the leader at the time, but a lot of names, aren't pulling back all the way just yet. Then there's like another sector, which is the mineral sector. TMC back, I guess, in April when this was consolidating, this was actually on radar as well and pretty much gapped up and had a great move, pulled back, volume was decreasing day by day. And as it popped through on Wednesday, we had that 245 breakout and reversal. It's not really a form of 2DLV, but could be. I mean, it's just pulling back day by day, lower volume, and then it reverses, breaks the prior day's highs. And yesterday, Trump announced some headlines on the deep sea minerals. So that had a great move, and now we're just pulling back. Volume's drying up a little bit. OMEX is another deep sea mining name that, if you think about it, same concept. We get that move from 25 cents all the way to 70, all the way to 80 cents. Then we just pull back 50%, volume day by day, just decreasing every day lower than the next. And then it pops back up through that 48, 50 cents. And this is a massive 280% move so far. This 140s is a key level from, back here. And it is also the 200 SMA. So, like, I think that, as long as we hold up, it's possible, we gap up again. What I want to see, though, in this is something like Lace, how we had a decent push, or we just have like multi-day gap, and then we just consolidate again. And like, I want to look for that delayed reaction here. I think as long as these names continue to hold up and consolidate, we may be able to see another leg up. This was the idea initially of, just seeing a new theme form at the moment. This was also before anything else started to move. The market was still going the opposite way, but these mineral names all together have been making huge moves. There's been big volume. AREC had a pretty decent 50-cent move to about $1, 90 cents or a buck. I mean, massive 50% drop. And then this is just the general liquidity trap that Chris and Nate talk about. We get that huge move, pretty deep sell-off, but then the second day, very low volume and reverses, starts to trend, takes out prior day's highs. We get that 130% move, we pull back, and now we're just consolidating a little bit. So these names are starting to consolidate. Every time it pulls back, the volume's drying up. We increase back on the pushes. We're putting in some inside days. So this, I think, is another sector I still want to keep an eye out for next week. So this could be included within my main watch list. I'm just going to be, monitoring it, seeing if they either consolidate further or offer some 2DLV setups in it. But this is just a gist. This is some reviews of what has happened in the moment, in the now, what I'm watching. And yeah, if I've missed anything, Chris, feel free to bring that up.
No, those were excellent, and I'm going to talk about OMEX a little bit as well. But I mean, you had so much to catch up on, from just market thoughts and everything. So those were fantastic. I enjoyed listening to them and everything. So I'll swap out our screens. I'm going to talk about OMEX, and so Judah just gave some great context on that. And there's so many different ways to play names like these, and I'll kind of just describe the concept, and then you can see how we're all coming at it from a slightly different angle, but the concept is the same. And so whether you're looking at this from like a daily perspective or more of like a close-up perspective, so anything like OMEX, it's a form of, trappiness and catalyst. And so basically, whether you're looking at a like a liquidity trap where you have that, first day and then it dries up and then you have, something set it off, that's like, one thing. And then you can also have it be a part of a sector like the mineral sector. And so you can have like liquidity traps or, something where you have shorts in there combined with the volume profile, combined with the catalyst, and those make for explosive moves. So whether you're looking at it on a more of a daily time frame or if you zoom in a little bit, there's a lot of different tools that you can kind of use to trade these. But the main thing is recognizing when, it's really about the trappiness and about the volume. And so what I like to do is when these names are really moving, if it's a high volume name, if there's a lot of shorts interested in it, and it's starting to trap, that means it looks like it's going to roll over, but it gets saved. It looks like it's going to roll over and it gets saved. You're accumulating more and more shorts in there. And then you have these pockets where they get blown out, and that's where you can really, capitalize on that. So Nate and I were both on this one, I believe, down here. And so it was in the 60s or so. It was that trappy action, and then it really had that nice move up to over $1. That was an opportunity. And then after you have that blowout, you have to basically reset that same trap. And so if you have it, starting to fade off, or it looks like it's going to roll over and it gets saved, you now have a secondary trap, and it just does that same thing. If you have kind of broad, trend lines, you can kind of see these names tend to do this for multi-day periods, and that's how you get multi-day runners that are trappy and that have that action until you get to a point where the volume stays high and you have more people looking for that squeeze and it doesn't end up squeezing, and that's when you can have those big fails. So the volume, the trappiness, the catalyst, those are all different variables that interact in different ways, and kind of having some experience, you can participate them on the long side, or you can at least know when they're starting to roll over and maybe look for a short there. So that was just one I want to touch on. Another one, like Judah mentioned, was Netflix. So this was an earnings catalyst one, and is on watch for continuation. So we talk about how in bear markets, the first thing that happens is that capital leaves equities. It de-risks. And then as you have more headlines and everything, it starts to sort through the rubble. And so capital is looking for names that has good earnings, that's not affected by tariffs, that is maintaining a good trend, and like people can hide out in those types of names. And so Netflix is definitely one of those. And you can just see how during this entire, correction, really, it's just held up really well, and now it's making new highs. Another one on watch for next week is Tesla. So big move off of the earnings. Obviously, the earnings weren't good, but what really mattered is that Elon said that he was going to be stepping back from some of the government stuff in the next month or so, and then he's going to be more focusing on the company again. So I feel like this move that we just saw was a huge clear out of all that, bearish positioning from this big unwind and from bad earnings, and all those things were kind of being anticipated. And it's like, okay, what was the main driving variable? And that was Elon saying he's, getting back to business. So I feel like we're having a huge clear out here. We might clear out this, 300 level and then sit back. But as long as there's not new tariff headlines or things, don't escalate any further, this could just be kind of chopping back into that mid-range where it was before. Apple, kind of a similar situation with SPY or with any of the major indices. It's really about what was driving the market. Market was selling off on broad-based tariffs, and then the Chinese tensions, and then you have all like the knock-on effects of that. And so if you had a 90-day pause on most of the tariffs, and now you have some kind of backdoor talks with China, those main driving variables are kind of relaxing, and so the market can relax with that, and that's how you can test some of these prior levels. And if things continue to stay good, you can go up and test the next levels as well. Palantir, relative strength, just like Judah said. And again, look for the names that are, they look like they have demand just soaking up every dip. No matter what happens, someone steps in and they're just holding up really well. So that and MSTR, which MSTR was a very counterintuitive one, especially while Bitcoin was selling off. But as Bitcoin, you see has caught a bid again, the market's relaxing, you have some capital coming back. There's an appetite for risk again. You can just see how MSTR not only held very well during the dip, but now it's starting to creep back up towards the highs. I think if we get much higher, you're going to have some of their convertible notes start to dampen some of the upside on it. But I think for now, that's at least one to watch in the Bitcoin names. NVIDIA, same thing. Google had earnings and they reaffirmed that they're still spending a bunch of money on CapEx. NVIDIA is a beneficiary of that CapEx. And so as long as the other FANG names also report decent earnings and that they're all going to be spending a lot of money on AI, then NVIDIA might start to get a bid again. And you could see it maybe ramp back up to that 120, 130 level as long as the other names agree. Gold. So we had some nice trades on this over the course of last week, mean reversion trades. They timed up pretty well. We were looking for that like options expiration week, but I really don't think that this was just an options move. This was really, the tensions with the currencies in the different countries that were arguing. When people don't want the U.S. currency, when they don't want other currencies, they look for safe havens, and gold was fulfilling that, goal there. And so basically we had that peak out, gold hit 3,500 or so, and now you just have a steady unwind in that. And if we continue to get good headlines, especially on trade, I think that you'll have a further unwind in gold. But if those trade headlines start to ramp back up, then you could have gold get bid again. CEP, so this was an interesting one, Bitcoin related, SPAC related, and this was Trappy related as well. So as you saw with like the OMEX, it's kind of that process where you have some kind of a catalyst, you have the volume come in, you have a bunch of shorts, and then it's just these pockets where it blows out and then it retraps, maybe blows out, retraps. And so for next week, we'll see if it starts to consolidate, if the volume dries up, and then we have that next leg higher, or if the volume stays high and it looks like it's going to break out, but it doesn't. And then that's how you can get those big fails. So again, just think about kind of who's in there. If you have everyone expecting a squeeze out, if you have all those people buying and it doesn't squeeze, all those people have to get flushed out. And it's the same thing if everyone's expecting it to drop and to mean revert, and it starts to get really trappy and it starts to stay bid. That's how you get squeezes. So just knowing who's in there and who's off sides really helps. And then the last one is this TIVC. This will be on watch for liquidity trap. With a caveat. So liquidity traps, of course, you have the big volume day, big spike, consolidation, volume dries up. And so if you had some kind of a press release, that could really send this higher. But with liquidity traps, one thing that you have to keep in mind is that the names that have had a history of big spikes with not a lot of follow through. So you had some follow through down here, big spike, consolidation, then, went back from 3 up to 6 or so. But you have these other instances where you've had that big volume day, big spike, and then a whole lot of nothing. So you don't know which one this is going to be, if it's going to be fade down and then re-spike up, or if it's just going to be a slow fade. So what I prefer to do is just have these names on radar. And if they have a good catalyst or a press release, that tends to set them off. Or you can just kind of wait for the day where they look like they're getting trappy, look like there's tension in the tape, looks like people are trying to cover, and then you could potentially have a move out there. So those are really the main names that I wanted to cover for today. Judah, any comments on those?
No, I think with CEP, if you go back there, so names like these, where they just gap up from 8 to 16, something to note is, or something I like to note is once it replicates its first leg. If you're looking to short and this is only my opinion, what I view, I don't short, but what I've noticed is once it replicates its first leg, there's a high chance, or at least you want to wait till then before actually getting involved in these, where there's no real, history to use. There was no daily chart there. It was just some sort of nothingness. I think before stepping in front, I think it's important to be careful. You never know where it's going to end up going, but if you want to, at least wait for it to replicate its first leg or move 100% off of the hourly moving average. But at the same time, Nuke moved 100%, had a decent retrace, but it never broke that moving average. It kept going, and CEP right now still didn't break its moving average on the hourly. So that's just something to note, is that, when something's holding very well on the hourly moving average, they tend to keep going until they break. So Nuke kept going. It ended up breaking, I believe, 44. It went from $3 all the way to 77 without breaking the moving average till 44. But as they're grinding and not breaking, I believe RJC also just held that 1 hour moving average. But I think either 100% expansion over the hourly moving average is good for a scalp. I still wouldn't hold it forever, but good for a scalp if you're going to actually look to short them, or the break of the hourly moving average and heaviness. And if you look at this volume profile as well, it could, I don't have a position. This could end, in my opinion, whenever it wants. It could gap down and be over. But if you look at the volume, every time it had a red bar, it was lower. Like we could see the 2DLV right there. Yes, the 2-day, and then it has a little bit of a bounce. And even the red candle afterwards, yeah, it's still lower than prior volume. And then if you go to today, Chris, you could see how much more volume there was when it started pushing, and then we get these just small type of pullbacks. Like the selling distribution is still a little skewed, and these really, there's better opportunity out there in my opinion. If I was shorting, I wouldn't even have this thing up yet. But that's just something to be cautious on. Only because you went over it, you're going over the long side. It's the same kind of view. Like if I was looking to go long, it's because of what I'm seeing. But yeah, if you were there day one, that's great. Day two gets a little tough on these. Like I didn't even look at it. Didn't even come up on my radars, but that's just what I think, my thoughts, my opinions.
Definitely. Yeah. And then just understanding, when is there edge for longs and when is there edge for shorts? There's edge for longs when you have a bunch of trappy action. Everyone's expecting that to fade. They get sucked in there, and then, you need to have a squeeze. And then longs get trapped when it looks really good. It's trading high volume. They're expecting a squeeze and it gets long crowded, and then it doesn't end up squeezing. And then everyone needs to get flushed out. So those are great thoughts that you had on those. Do you have any closing comments before we start to wrap up, Judah?
Nope. I think we covered a decent amount.
Yeah, we definitely covered a lot. And I think, a lot of people are going to get a lot out of this, especially more, long bias traders and, more swing traders too. So final reminder, Centerpoint is running that deal. It's a special for IU, followers. So if you sign up for a Centerpoint account, and if you fund it, you get some incredible benefits, including a free Investors Underground subscription if you fund the account with $50,000. So just something to keep in mind. If anyone's looking for a new broker, they are fantastic. They have the highest reputation in the industry, and a lot of great traders use them. So that's all I have. Judah, thank you so much for coming on Scan this week, and I'll see you in the room.
See you in the room. Thank you.
Thank you everyone for watching. If you want to trade live alongside me and other members of the Investors Underground community, then check out investorsunderground.com to see if becoming a member is the right decision for you. They have some of the best technology and a lot of great members there, all looking to help other people improve their trading. And also check out Investors Underground content on YouTube and Twitter. Thank you.